For anybody listening to this who's thinking about getting started, I got to tell you, I have a wife and two young boys. I have a full-time W-2 job also. I have there's 5 brands under active duty passive income, and we have apartment investing. So if I can figure out a time and a way to do these things, so can you. I don't care how busy your day is, unless you've got 5 businesses and a full-time job and a wife and kids and all this other stuff. You can do this too. It's just about building teams, having the right resources, and never quitting.
This is episode number 24 of the Multifamily Success Stories podcast. Would you like to turn vacant units into cash and earn up to 3 times more per door without having to do any extra work yourself? We offer fully managed short-term rental solutions for multifamily investors. Go to managedbylux.com for more information.
Hey, this is John Bell
And Julian Sage.
and welcome to the Multifamily Success Stories podcast. This is a show where we talk to multifamily investors about their journeys and starting and growing their real estate empires.
Our goal is that you'll be able to walk away not only inspired, but with practical information to help you in your real estate journey.
Since we are a new show, please go over to iTunes and leave us a review and let us know what you enjoy.
And if you haven't done so already, go on over to our Facebook group, the Multifamily Success Network, to connect with the community. Hey, what is going on, deal makers? Julian Sage here, and in this episode, I had the special honor of speaking with Eric Upchurch, an Army Special Operations veteran, the senior managing partner at ADPI Capital, and the co-founder of Active Duty Passive Income, an education platform that helps teach military members how to create long-term wealth through real estate investing. Eric currently has 571 units and about $62 million of assets under management, with properties located in Indianapolis, Louisville, Atlanta, and San Antonio. In this episode, Eric shares his journey from military to real estate investing, how he looks at his education business versus his real estate business, why Eric chooses to keep his W-2 instead of being financially free, and some of the challenges of raising capital and investing while also creating an education platform. If you like my show notes for this episode, go to multifsuccess.com/EP24, or if you'd like my show notes sent directly to your inbox every week, then go to multifsuccess.com/show notes. With all that being said, on to this week's conversation. Hey, welcome back, deal makers, to another episode of Multifamily Success Stories. In this episode, I have the special honor of speaking with Eric Upchurch. Eric, would you please introduce yourself to the deal maker community, let them know who you are, and what inspired you to get into multifamily investing?
Yeah, absolutely. Thanks for having me on here. Just a little bit of backstory. I served in the military after college, chose the enlisted route because it paid off all my college debt, and I was able to go and influence more service members as kind of a senior guy, or a little bit older guy. I'll say I had a little bit more experience on me, a little age on me when I enlisted. So got a lot out of that. Loved my time in service in the special operations community in the Army. And that kind of thrust me into the world of single family investing. I had didn't know much about it, and actually our company, Active Duty Passive Income, is kind of a byproduct of us just wanting to share our experiences that we wish we had known at some point in our lives, whether serving or not. And so I bought a house with a VA loan. My wife and I lived in it in Savannah, Georgia for 4 years. I ended my time in service in the military, moved back to the San Francisco Bay Area. But at that time, that was like 2011. It was not a good time to sell a house, especially one that was 100% leveraged with the VA loan. So didn't have a lot of equity in it, and said, let's just keep it rented out. Thankfully, it cash flowed net about $80 a month. And which, one tenant moves out, you've lost many months of net income on a property like that. But again, we were not analyzing that property as a potential future investment property when we bought it. We were just doing what most military guys do. You go and buy a house and live in it and sell it and whatever. So anyway, fast forward a little bit, back in the Bay Area, out of service, had a W-2 job, and I just kind of looked at that property and said, I wonder if there's a way that we could duplicate that. Is there something that we can do to make the numbers better than that? I don't know. So, I read Rich Dad Poor Dad and, millionaire mindset type books. And, I remember driving down the freeway and going, I have a millionaire mind, and like kind of yelling, getting all pumped up. And I'm like, okay, I got to get my mindset right. Now let me go to a a 3-day boot camp and see if I can like get that thing going, And so I was just in this stage of a couple years of just growth and learning about real estate investing and kind of what it meant and different facets of it, and really wanted to kind of pick my niche. And so I was able to kind of one pivot point, I would say, in my thought process was when I realized that the current house that I lived in, which I bought with a VA loan, so zero down again, we paid $500 for it. And 2 years later, as I was learning about real estate investing, it all of a sudden was worth $690,000. And so we really were just kind of, looking back, it was a funny time because we're like, holy cow, like that's more money than I could ever imagine having. How did that happen? And we didn't do anything. We didn't renovate the house. It was just a nice house in a nice Bay Area town. And so now with eyes wide open, we ended up, look, okay, now how can we do that again? That was amazing. And maybe that's my niche, live in flipping, And I wrote about that in the book a little bit, military house hacking, but it's was my version of house hacking was really just taking my family and moving from one spot to the next. And that isn't for everybody. You really have to have a supportive wife. Thankfully, my wife is on board with all that, and she's amazing. And our 2 sons we took with us, and so we did that 3 times, and that was kind of our capital building phase. And all the while, I'm learning more and more about real estate investing. I'm networking. I'm reaching out to people, and stumbled across a friend that I went to college with who was syndicating apartments. And so really was fortunate to have him to say, can I just talk to you on the phone for a minute? So he said, well, we're doing this thing called syndication. Here's what an example deal would look like if you invested some of that money that you've made in your live-in flips. And so that was my first like introduction, and I did invest. In fact, they're selling 2/3 of that portfolio as we speak. So it's 3 years later now. So that first limited partner passive investor deal is about to go full cycle. And so I can kind of see how the whole thing worked from an investor standpoint too. So that's kind of how I got introduced to multifamily. It was really a transition from military to single family to just figuring out what I wanted to do. And then in came multifamily, and went to a multifamily boot camp at that point. And I was just in at that point. I just said, if the people up on stage can do this, I can do this. And so yeah, from there, just now focusing on multifamily for the last couple of years.
So you inadvertently became a real estate investor just because you were able to purchase at probably a pretty good time. The values went up. If you could go back though into your your younger military career, would you have still done the same thing that you did with that first property, or would you have gone like straight into the multifamily syndications? Like what would you have done differently?
No, I think, somebody, if you're an E1, E4, junior enlisted in the military, or just, younger in age, either way, just getting started in the military, it's, and that's actually what I'm not trying to plug our book here, but that's what our book is about is if you're in the military or if you're getting started, think about house hacking, think about bringing your friends into the fold and helping them pay rent to cover the mortgage. Don't rent yourself, buy if you can, and have other people, pay the mortgage note. So if I had known what I know now, I would have purchased a fourplex with my VA loan immediately, and lived in one unit and rented out the other 3, and probably self-managed at the time. And, that's a repeatable process with a VA loan. You can buy a fourplex, and if you can refinance it down the road, turn it into a conventional loan, or if you can qualify for a secondary VA loan as well, which is a possibility. I've had 2 simultaneous VA loans as well. You could just buy fourplexes at every duty station that you go to in the military, which is amazing. So yeah, I probably would have analyzed the deals differently. Not probably, I would have. I mean, I would have analyzed for cash flow on a $150,000 purchase price. I wouldn't have purchased. I'll just say it this way: I would not have purchased that house because it couldn't rent at $1,500 a month. It was renting at maybe $1,200 a month. So if I know that the rental market on a 3-bedroom, 2-bathroom house is $1,200, you should pay maybe $120,000. So I should have bought something, used. Some house that was 5 or 10 years old in some other subdivision, and just lived a little. That would have just cash flowed a lot nicer.
So if you were, if you're in the military and you're trying to self-fund and grow your portfolio, I mean, how are you able to acquire multiple properties, with maybe just like a single income? Like if the military is all you have and you purchase this property with the VA loan, like how are you able to scale up to additional properties?
Yeah, I mean, there are a lot of different ways that you can do that, which are, if you're open to it, and living frugally and saving a lot of that, so you can build up your own cash reserves, even on a military salary, um, especially if you're house hacking and your tenants, your buddies or your friends or other family members are living with you and paying rent to you as well. So you can build up your cash flow that way, but you can also go out and talk to friends and family and do a joint venture. You can raise private money. You just have to be bold and kind of understand the nuts and bolts of what you're doing, and be intentional about with your potential investors, about what you're doing and what the returns are going to look like. And so obviously in the multifamily world, we are very careful with SEC regulations and the way we talk to investors. But on a single family, if you're friends and family and you're truly a joint venture, you don't have to worry about SEC stuff most of the time.
For people that are interested in getting into real estate investing, should they be considering like joining the military because of like the VA loan, or should they, maybe skip that and say like, hey, I'm just going to go in multifamily. I don't need like, the benefits that come with being in the military. Because, we might make it sound pretty nice, but is it worth it really in the end if your long-term goal is scaling?
It's definitely not a reason to join the military for the VA loan. And the VA loan is not inherently an investment vehicle. It is an owner-occupied loan. You must live in it. It has to be your primary residence. And lenders will it's at the lender's discretion on how long you have to live in it. Some people think it's 1 year, but that's up to the lender really. It just the VA guidebook says that you need to have the intent to occupy within 60 days. So but no, not a reason to join the military. It's a great benefit, but only about 13% of people who are eligible to use the VA loan are actively using it, or have used it. So that is a massive gap in education, and just understanding that there's people out there that could put zero down on a house and roll in their VA loan funding fee and have the builder or seller pay closing costs, literally come to the table with no money. And these people have been renting for decades and never owned a property before. And it's sad to see. Maybe that's their goal. Maybe that's the lifestyle they would like, but home ownership has its benefits as well. So not a reason to join, but because you can also do something like the FHA loan, and kind of starter loans. There's USDA loan. There's all kinds of loan products out there that you could do to get your foot in the door, and it can still cash flow if you analyze it the correct way. So yeah.
Do you know if anything has changed? I know, I'm an active duty military guy, and I've heard of the funding cap being lifted for the VA loan. Does that influence or does that change how military investors should be looking at the types of properties that they can potentially be acquiring now?
Yeah, absolutely. I mean, without getting into too much details, I'm not a loan officer. We do have a mortgage company that handles this, but internally. But it, really that people are closing loans, and you have to qualify. These aren't like over leveraged, I can't afford it, going to get you into a bad position type of loans like they used to be. These are loans like people are closing, $1 million+ loans on with the VA. They have to qualify. They have to show proof of income. They have to, it's really a rigorous process to get into any loan really nowadays. But yeah, so people can be more bold. They can analyze more types of deals. I mean, imagine, buying a fourplex in some city that would normally you would never be able to afford it or something, because of the cap on the VA loan. Now, without the cap, you just have to qualify for it, and then you can buy the thing. So, like I don't know, think of a military town that's big, like San Antonio or something, right? So go buy a fourplex in San Antonio with no money down. That's pretty amazing. Why not?
And at which point did you say, I mean, are you still like actively using the VA loan, or at a certain point do you say like, hey, I've maybe graduated from just doing this into the next level of real estate investing?
Yeah, that's so. I still, on my primary residences in California, I'll still use the VA loan when it makes sense to. I'll look at rates. But yeah, that's, to me, again, it's not an investment vehicle, but if you're intentional about it, you can make it advantageous to you. And so, but from there, you're no longer looking at your primary. If you want to scale or do something different, your goals change as you develop in this industry. You really want to start looking at, outside of what can I do to build a business outside of my primary residence, right? Like how can I start to syndicate? How can I even be a limited partner and invest passively? I've done some private lending. I've done tax liens. I've done single family fix and flip. I've done BRRRR investing, buy and hold, small multifamily like duplex flipping. So I've done, and tax lien, I don't know if I said tax lien. I've done a bunch of different things to see kind of what I like to do, what I'm good at doing. And I found multifamily. I feel like I can contribute a lot to the multifamily community with the skill sets that I have and that I'm passionate about giving. And now we own multifamily, we own a mobile home park, starting to get into a little bit of storage. And so once you start the process of doing something bigger with bigger goals, I like to lead with bigger giving goals, and that kind of leads me to what do I need to do next to hit that. But yeah, from then you'll start to meet the right people. You'll start to get the right resources and read the right books and go to the right conferences and attend the right meetups and things like that. So
Do you, I mean, it sounds like you've done like a bunch of different investing types of vehicles. Is there like one that really sticks out to you, or did you do one type of investing that you're like really surprised that maybe this is maybe even better than multifamily, or this is better than this? If you could kind of rank them out, what would you say?
yeah, so we're about a year into our mobile home park that we bought. It's a 71 pad park, and then and within the same month we bought an 80 unit apartment asset, and both of those have increased in value by about $1 million in the last 12 months, and that's through 2020. So that's been great. But the difference really that I'm noticing is the mobile home park we bought under $1 million, and it's worth almost 2.5 million now. Whereas the multifamily property we bought for 3.25, and it's worth over 4 million now. So just in general, the mobile home park had more meat on the bone, and we haven't even raised pad rents yet. It was just there were a lot of homes that needed to be demolished, and we brought in new homes and got the right tenants in there, and then we're also selling the individual units to the tenant so that we no longer are required to maintain the units. That's one of the value add plays for mobile homes too. So but yeah, I tend to like I like multifamily commercial real estate in general, not commercial. Most people, when you say commercial, if they're not familiar with multifamily, they think office buildings and things like that. I'm not really into that at all. But yeah, commercial multifamily is kind of a good, comfortable niche for me.
And is investing, for you, because you've also, you work with activity passive income. Was that something that you actually co-founded as well?
Yeah. I co-founded ADPI, and aside, that's a completely separate business from our investing. We actually don't commingle our group and our company with our apartment investors. Just happen to invest also with some of the other founders.
My question is like the amount of time and energy that you have invested into like real estate investing, how does that compare to like your other businesses that you run? Is there, like, if you would spend all that time into your primary business that you invest into multifamily or into your investing, could that have potentially a greater ROI or vice versa?
Yeah. So I think ROI is building the greatest ROI is building our education company and community active duty passive income, even above and beyond the multifamily space. And I'll say that because we have a lot. I mean, there's 15,000 members right now and growing by 1,000 members a month and a 93% engagement rate. And that community really started by us, like I said earlier, just explaining what we wish we had known and then creating a #1 best-selling book and single and multifamily courses, but also listening to the community and them saying, no, we need lending, we need insurance, we need real estate brokerage. And so now we've created all of those things internally. And so my time is spent quite a bit on building those brands and those companies. But for anybody listening to this who's thinking about getting started, I got to tell you, I have a wife and 2 young boys. I have a full-time W-2 job also. There's 5 brands under active duty passive income, and we have apartment investing. So if I can figure out a time and a way to do these things, so can you. I don't care how busy your day is, unless you've got 5 businesses and a full-time job and a wife and kids and all this other stuff. You can do this too. It's just about building teams, having the right resources, and never quitting.
So, I mean, you have a whole lot going on your plate. Why actively go out there and GP deals? Like, why not just be an LP and focus on, the other businesses?
Yeah. Well, that's a good thing to ask. Great question, because a lot of people will get this fire of like, oh, I'm going to go buy apartments. I'm going to go buy apartments. And for me, with our community, it's me walking the walk. I need to be able to show people what we do, how we do it, encourage them to go and grow and find bigger things and to seek out the life that they deserve. That's really the goal. Your life doesn't have to stop when you end service, and that's I say that kind of intentionally, because there are a lot of issues with veterans who transition out and don't find new purpose. And so we really want to walk the walk as we're building a company. We want to be investors, but ultimately, as soon as I hit a certain point, I will only be a limited partner investor. If I had, think about this. If I had $5 million right now to invest in at a 7% preferred return with all of my friends that I know, and I know enough to do this very easily, invest $5 million with friends in the multifamily space at a 7 pref, that's $350,000 in interest per year that I could very comfortably live off of in California. Right. So that's one target I have personally is, okay, once I hit 5 million, I can invest, or I guess you put it this way, once you have 5 million to invest. So that's not every dime you have. Right. But that's the dream is really just being a limited partner investor. I understand the nuts and bolts because I'm an operator right now. So I'm comfortable, scrutinizing the deal and analyzing the team, and I understand how to communicate with people. And at that point, I can go out and invest comfortably with people and just live off of the returns, which I'm excited about.
I mean, do you think that everybody should be investing into multifamily? Lots of people are, starting podcasts. A lot of people talk about the space. You guys teach on the space, but you're also, you run a business, you have a life, you're LPing, you've invested into a bunch of different deals. Do you think that everybody should be investing actively as a GP into deals, or should people maybe be starting businesses or staying in the military? What do you see?
I think people should do. First, you have to start off with a deep-rooted why. What's your intent for your life? What's your purpose? What's your mission? What makes you feel good? And that's why I did a lot of horizontal growth when I was just getting started. I wanted to know, like, how do I feel about investing in this asset class? What did I learn? What did I enjoy doing? What piece of the team am I going to make up to make it a successful venture in this real estate asset class? So if you're out there kind of wondering, should I be an active deal sponsor, a general partner? Should I just go passive? Look at your life and just analyze what your goals are. That's the most important thing. What do you want to accomplish? It's not about other people doing podcasts or other people's success in building this massive. They have 10, my neighbor has 6,000 apartments and apartment units, not complexes, but he has 6,000 doors and he is comfortable. that was where he wanted to grow. One thing he's actually missing, this is kind of a funny side note, is he wishes he kind of missed the social media bandwagon. He's about 10 years older than I am. And he's like, man, I see you on social media and I wish I had that element to my business. And I'm like, man, I can't wait to get away from the social media element someday, So, but anyway, so it really just depends on what your goals are. I don't think it's for everyone, but as far as the active investing part of it, and that's completely fine. Nobody should ever feel bad about that. You find a team that you like to invest with as a limited partner. I mean, I still invest as a limited partner, even though I'm a general partner as well. I love investing my money back into deals with good people that I know in this space, and that's where I intend to go. So it just depends on what the person wants to do, and yeah, just takes a little time to discover that.
You're definitely a thought leader in the military space. I've been in for about 6 years, and I remember when I first started looking into real estate investing. I came across ADPI back a few years ago. For a lot of investors in the space, they look at thought leadership platforms as a way to be able to also help grow their real estate investing businesses. Why did you make such a clear definition for not commingling or not blending those two together?
That is a great question too, because we actually have people who are upset when they can't solicit on, for instance, in our Facebook group, right? We don't allow solicitation, including from ourselves. The ownership team, the leaders in our community don't solicit our own deals because that's not our game plan for the community. We want it to be a clean place where people can come and get their questions answered and know where to start or where to go next. So if we have people in there saying, I got a deal in Georgia, check this thing out, it would just get cluttered, and 15,000 people is too many to manage. A lot of personalities, and people do, no matter what you do in business, you can't keep everybody happy. So people do get upset with us sometimes that they can't, advertise their real estate brokerage or their whatever it is, but that's okay. We just decided very early on that we're going to be bringing in other partners to the business, and we need to keep it as clean as possible for that reason, because not all of us on the thought leadership kind of side of ADPI are doing deals together at the same time, and just to keep it as clean as possible and to honestly keep it as fair as possible. We can't expect people to do what we're not doing. So,
but also, why not? I mean, you've definitely taken a large market. Probably you're the I'm sure that you guys are probably like the number one in the real estate and military space. I mean, you figure anybody that's in the military that looks into real estate is probably going to come across you guys. Did you think about that as being potential? That, if even just 1% of military people could invest into this deal, I might be able to raise, or
100%. And people actually they think that people outside of the group, because it is a closed group for OPSEC reasons and some other things too, but people think that we have the group as a lead source for multifamily investing or something, and there is zero advertising of any deal that we invest in that we have going. So, but we did that again. Just we wanted it to be clean. We did not want that to be a source. So we could, for instance, have a fund and I have definitely talked to attorneys about this before, and it could be something that happens in the future. But because we know we've built rapport, we've built kind of a track record in the space. We are the number one military real estate investing community out there, and but at this point, it just doesn't make sense for us to find a 506B fund and have only 35 investors at a time come, or a 506C where you have accredited investors, but look at our community. If a certain percentage of our community is active duty still, they're most likely not going to be accredited. And so there's part of it is just being fair. Part of it is looking at the community, looking at what their needs are. But we are starting to hear more and more, how can we invest with ADPI? How can we? And so we're listening to that. Everybody who knows us just know that we're listening. That's why we have a mortgage branch. That's why we have an insurance company. That's why we have a real estate brokerage, because we are listening to what our community is needing. So.
Do you get approached by a lot of people that maybe look at you as being like a potential capital raiser? Like, hey, you've got this thought leadership platform. There's so many people that follow you that are interested in multifamily. If you help us raise money for this deal, you can get, X% or be a co-GP or whatever.
Yeah, not that often because of ADPI, but my answer is no. My answer is there isn't like if somebody finds me because I've done 50 podcasts in the last 18 months, that's great. Somebody can find me there and connect, and I'll send them my investor to my investor portal, my website, my personal website. But yeah, if it has to do with ADPI, it's not. We're not using our email list for any kind of investor relations at all.
And how have you been able to raise the funds for these deals that you're going out? Are you having to, what are some of the struggles that you face if you're trying to separate your, all this time and energy that you've put into your thought leadership platform for trying to raise capital on deals?
Yeah, man, I'll tell you what, my first response to most things as I was building up kind of my presence in the multifamily space, my answer was always yes. Now I'm saying no quite a bit more, which is great. But initially, man, I was like, I'm going to be successful. I burned the boats. Like, I'm all in on this thing. I got to be successful. I've got drive. I got to meet these goals. I got, people watching or whatever it is that was motivating me to do it. So I was saying yes. I was like, so the first time I got offered to come in on a deal, like, there was part of it was a capital raising portion. And I was like, well, who do I know? So, like, I'm sure you had that moment where you're like, I don't know anybody, especially early on. I was like, maybe my uncle or so literally just opened up my phone and started like calling kind of just people in my phone, like, well, I don't know, they probably have some money, and just calling. And so you have to have that kind of bold, presence, and capability to just go out there and cold call people in your phone. It's not that cold, I guess, if they're in your phone, but still just, opening up that idea. And honestly, now my wife laughs because I'm in such a habit of telling everybody what I do. I came home from I have a orthoscopic knee thing going on, surgery, and I was talking to the surgeon, and he's like, yeah, let me know about that next deal, and whatever. And I told my wife that, and she's like, why are you talking to your surgeon about multifamily? I was like, what? Are you kidding me? Why would I not? Like, he's got to know that I'm a multifamily investor. He's perfect for it. He's busy. He's busy reconstructing knees. Like, he doesn't know what to do with his money, So now it's just such a habit. But initially, huge roadblock was like, deer in headlights. How do I raise money? Like, who do I know? So, but anyone who's listening here, you got to just do what I did and just go, well, I'm going to try. I'm going to go out there. I'm just going to call people and say, here's the business plan. And part of that, you got to know what you're saying first, right? You can't just go to somebody and they haven't talked to you in a while and say, hey, I'm raising money for this deal. And you've got to know the language of multifamily first. You've got to know about being SEC compliant and how to talk to people and some of the nuts and bolts. But that's easy enough. That's a well-traveled path. Anybody can learn that through a series of courses and coaching and education and whatever. But at that point, you gain the confidence, and you just got to go knock it out. And you're going to screw up conversations, but who cares? Just move on to the next conversation, learn from it, grow. But then, so as far as like the first couple of years, couple deals, whatever we were doing, we always bake into our letter of intent, our LOI, a couple of extensions. And on our first deal, we needed 2 extensions because we were ill prepared, because again, we don't solicit to our own community. So we were not prepared with all the things we have going on. We were not prepared to raise capital. You need to be finding deals and raising capital at all times, and not actually receiving money from someone at all times. I'm saying get commitments from people at all times. Let them know that you've got deals coming. You're sending them your sample deal packet or a previous deal you did, and you're getting soft commitments all the time so that when you have a deal, boom, you're ready. You just call them and say, hey, here it is. Got your commitment. I'll send you the private placement memorandum. Sign up. Deal is limited. That type of thing.
And how does that make you feel, not maybe being able to accomplish those goals? I you're a military guy, you're, Army special operations. So it's like that was your objective, was to complete it within that time period. But how does that make you feel, having built up this platform, having a lot of experience, probably feeling confident, not being able to reach those goals in those time periods?
Yeah, fortitude and perseverance. I mean, we persevered. So, like in special operations, and all of the hard things. I think back to special operations qualification course. The perseverance it takes to get through something like that, and all of the other courses that I was able to go through in my career in the military. There is nothing really hard about what we do in real estate investing comparatively, right? It's a well-traveled path. Like I said earlier, it's, no one's shooting at you. You've got plenty of food, a nice place to sleep, all that stuff. So it's really just perseverance. And actually it made me better that happened on the first deal that we did on our own, because I had to call my mentor and go kind of like, I'm panicking a little bit and like, how am I going to do this? We've got some money wrangled up. We've got some people, like herding cats, trying to get others to send their investment. And we've already done one extension for 30 days and, half of our earnest money is hard now. So there's actual money on the line. What do I do? And so I had to just persevere. And mostly his response, a couple of my mentors' response was just like, persevere, keep calling, just go. Keep on moving forward. Ask for referrals. Who else would you know? You're not interested, but who would you know that might be? Just, it's really just perseverance. And so I'm thankful actually that nothing has been, or that the first couple of deals were not like perfectly smooth. The second deal, the mobile home park, we couldn't get funding for it. It was under $1 million. So Freddie Mac small balance loan was out. And we ended up partnering with a family office that funded debt and equity. And it made it super smooth, but we were worried for a little while that we weren't going to be able to, even the local credit unions weren't having it. So, things work out if you work at them.
And was that a relatively big or small family office?
Yeah, it was a pretty big one. And now, they actually, are willing to do, because we're about to go full cycle on that, park also, even though we've owned it for a short amount of time, they're going to be willing to come right back and do the next deal with us too, I'm sure. So,
and how did you, what were some of the maybe some of the pivotal moments in trying to raise the capital for these deals? Was it like finding that family office, or did it come from all your friends and family?
Yeah, for the park, it definitely was, because we were having a challenge on the debt side, not so much the equity side. And they just came in and said, well, we'll give you the equity if you also give us the debt. And we're like, solve two problems at once. Sounds great. Now that's not ideal necessarily, because, they have a lot of leverage in the deal as well, if they have debt and equity, but, that it was okay. It ended up being just fine. And, so pivotal point for sure. Just knowing that doesn't matter how this is going to happen. And we also learned at that point, when you're getting started, it's not a good idea to have two deals going at the same time. Just do one at a time. We had two. And so that complicated investor relations as well. We had to figure out which investor is more interested in which type of asset class. And then, okay, well, we've got this team here working on the mobile home community and this team here working on the apartment community. Do we use some investors return, investments for this one or this one? And kind of, do you rob from this one to do this one? Which one's closing first? And it was just a mess. So when you're getting started, do one at a time. If you have two, if you're so lucky that you have two under contract, figure out a way to wholesale one of them. And just make a little bit of money. Don't get greedy. Just pass it on to somebody if it has some meat on the bone, and let them close on it.
What would you say would be some of your, one thing that you said was you had to learn to say no. Can you kind of talk about what are some of the things that you're doing now differently than you did before?
Yeah. So right now we were initially looking between Louisville, Kentucky and Indianapolis, and that's where the majority of our assets are. And then once you start networking and start meeting a lot more people, people start sending you leads. They start sending you deals, or you're like, man, I love Atlanta, or I love Dallas, or Huntsville, Alabama, or Oklahoma, or whatever it is, right? But then you start getting spread thin. then then you have to go find a new property manager in that area. You have to reference all these people, find contractors, build your team in that market. And so one of the key things that we've been saying no to is when people send deals outside of our deal criteria, it's a no. It's just an automatic no. With all the other things that we have going on, including operating the units that we have, we can't spend our time. And with ADPI and all these other things that we have going on, we can't spend our time. Like I have to think about my time, right? And it doesn't make sense for us to go and look outside of areas that we know we already have the team. Low hanging fruit is great. We have relationships with brokers now that they will send us off market deals when they come around, and they know that it meets our criteria. That's good. I'll take that. If I do one deal every year, perfect. Let's just do that.
And do you feel that because of the things that you have going on outside of just primarily real estate investing, that you have the luxury to be able to do that? Or do you think that, even people that are, just trying to, get by through survival for finding that next deal, that they should be doing the same thing?
Yeah, a lot of people will do more and more deals because they don't have a safety net. Or they don't have an alternative. And that's okay, because and what I mean is you can make a pretty hefty acquisition fee, and that could pay 6 months worth of your bills, or I'm just making up numbers, but it could, there is an acquisition fee that you earned because it was, you put your own earnest money down and you did all the due diligence and you're under contract and you're the guarantor on the loan and all these other things. So that's well earned. And a lot of people will do a deal and their cash flow is not from the asset management fee. Mostly it's from the upfront capital of the acquisitions fee. And that's great. But my model is a little different personally for me, because my mentor said, keep your W-2. If you can do both, keep it. It's a great backstop. It's a way to keep on building cash flow that you can re-inject into the next deal. And if you've got an entrepreneurial venture, for us, like ADPI, that is full steam ahead and doing really well, and you've built out this team and the systems community, keep it, go all in on that. So we're just a little bit different in that multifamily is not our primary focus, but for that reason we can say, let's take the low hanging fruit that are great deals that meet our criteria. It's low stress, and we're also just ridiculously conservative with our numbers. Maybe it's because we're military guys, but we don't mess around with things. Like, we're not going to, actually a deal just came back around. We lost a deal. We were final round. We actually had a signed LOI, but they ended up, that's not contractual. So they ended up going with somebody else who offered them, I think, $400,000 more than us. And that just fell out. So now the broker came back to us and said, well, that fell out. They couldn't close. Turns out, go figure. And we could have guessed that probably. That maybe they didn't know how to underwrite very well or something. But we're going to dig into it, and our offer is going to be what it was, or maybe less now, depending on what we discover. And so that was something that just because we were super conservative and waiting for the right deal with the right broker, right criteria, comes back around, and now we can hopefully close that deal.
One thing that you said that really kind of stuck out to me was that, your mentor told you to, keep your job, keep your job. A lot of people, even including myself, might feel guilty, or like, man, I'm not successful because I still have my job. Like, all these people, they're able to be full-time investing, they're able to quit their jobs, they're able to live the life that they want, but I'm still with my job. How have you dealt with that, or how do you feel about that? Being a thought leader that talks about investing in the space, but then still, having a primary job.
My first criteria for me, first goal, the first thing that comes to mind is I need to protect my family. I don't care what other people think. I don't care what other people say. I'm going to take what I think is sage advice, and I am going to apply it to my life. So if I can do both right now, that's what I'm going to do. And I really just would emphasize, don't worry what other people think. and it comes down to cash flow. Can you pay your bills? Can you build the life that you are seeking to? And I don't look at multifamily investing as a short-term get rich quick thing. I'm doing this for 30 plus years. I want to do this for a long time. So I committed when I signed up initially for coaching, and I was like, oh, I'm all in on this. I said to myself, I'm going to work at this for 5 years, just as hard as I can. I'm not going to expect anything from this for 5 years. And, with that mentality, it set a pace for me that was consistent with the idea that I don't need to leave my W-2 job. And if you enjoy it, some people enjoy it. Everyone's like, oh, I need to leave the rat race. I got to get out of my job. Well, I also live in California, and it's expensive to live here. And so if I was living in my hometown in Iowa, my financial freedom number would be a little bit different than it would be in California. So my goals would be different. So everyone listening to this is in a different spot in their life. They're in a different spot geographically. Some people love their jobs. Some people hate their jobs. Some people have huge goals. Some people have smaller goals. Some people would like to just own 10 properties paid off, 10 single family properties paid off, and they can live forever on that income. That's perfect. But my goal is to, like last year, 2020, we had a goal of donating a house to homeless veterans. We accomplished that in October, and now we have a bigger goal. And every goal has a bigger goal behind it, right? But our goal this year is to raise a couple $1 million for Veterans Community Project. How? I don't know. I didn't know how we were going to donate a house last year either. I had no idea. It's just a goal. Something you strive for, you tell people about, you talk about it. My 10-year goal is to end veteran homelessness this decade. We're going to end veteran homelessness, and don't know how it's going to happen exactly. It's just it's a math problem, really. It's a solvable problem. We just need a lot of donations to get it done. It's already happening. So whatever it is that you want to have happen in your life, if you're listening to this, go make it happen and forget about all the noise. There's a lot of garbage out there that's going to feed your mind. So just listen to great podcasts, take good advice from people, and apply it to your life in the way that it makes sense for you.
Do you think that if you weren't working though, that you'd be able to commit more time towards achieving those goals? Or do you think that your job is supporting you and allowing you to be more strict with your time?
Yeah. So, I mean, that's another great point. There's that point of, how much time are you dedicating to the thing, right? So there will come a tipping point where you've got to just kind of jump, and it's okay. It's time to cut bait with the W-2. Maybe that's an income thing. Maybe you've hit a certain pillar where you're like, okay, now I can pay my bills with my passive income or my active income from my real estate investments. Or maybe it's I need to spend more time. I actually need to spend more than this 2 hours a day or 4 hours a day, after hours or at lunch or before work or whatever it is. I need to spend more time doing this thing. And at that point, just have a conversation with your spouse, whoever else is involved in your life, and that employer, and just see what will work out for you. So yeah, it's just a timing thing. And yeah, you want to make sure that you're keeping up with your W-2. You want to make sure you're keeping up with your obligations to your investors, your partners. And as long as there's some kind of balance there, keep chugging on.
And a last question, just to kind of wrap this up. If you could go back and start from scratch, what would you do differently?
I think I said this earlier, but I would have purchased many more units without fear. There's so much, it's fear and lack of knowledge, right? I don't think I would have been fearful if I had the knowledge, but I didn't know. I didn't have that kind of that moment. It takes a spark, right? Like an aha moment of like, holy cow, I can buy a fourplex with a VA loan with no money out of pocket. I'm in. I wish I could go back to that moment when I was 24 years old and at my first duty station, and just I've been like, oh my gosh, I'm buying a fourplex right now. This is crazy. Because as well as I do, that snowballs. Like, you start your first investment, all the fear goes away. You're like, well, that wasn't so bad. I mean, it was a lot of paperwork, and like, I don't know, I had to spruce the place up a little bit, but figured it out. So how do we make that happen again? So yeah, I wish I had that knowledge that to buy something bigger.
Awesome. And what's the best way, Eric, if anybody wants to be able to reach out to you, if they have any other questions, maybe they resonated and they're in a similar place in their lives, how can they best reach out to you?
Yeah, you can reach me. I'm on Facebook. I'm on Instagram at Real Eric Upchurch. And you can email me, eric@activedutypassiveincome.com.
Awesome. And of course, all the links that we talked about, I know that you mentioned your book, you mentioned your community. Was there anything else that you wanted to be able to share that you think would be pretty invaluable for the listeners?
Yeah, I'll leave you with this piece. Something I say often, but I am passionate about it. If you're getting started, what I call the success formula for anything, any path you want to go down, learn all you can, network your butt off, add as much value to other people as you possibly can, and take massive action. If you do those 4 things over and over to be 1% better daily, success will hunt you down. You don't have to worry about the rest.
Awesome. Well, thank you, Eric, for wrapping that up beautifully. Of course, all the links are going to be in the show notes of this episode. And until next time, deal makers, I'll talk to you later.
Thanks.
Hope you all enjoyed this episode. If you did, please go on over to iTunes and leave us a review, as that greatly supports the show. And if you'd like to be able to connect with John, the community, and I, then come and join us on our Facebook group, the Multifamily Success Network, where you can connect and make deals with other multifamily investors. Go to multifsuccess.com/community.